Wow, do we have an action-packed program for you today? The gold standard is the Wyckoff method. So Wyckoff is just such a great way to view, analyze, trade charts, and we are going to spend our entire episode looking at different markets from the perspective of the Wyckoff methodology. So today we are going to do a stock market update, looking at the Dow Industrials. We are going to look at sentiment and the current state of sentiment, the NASDAQ 100 trend analysis and a point and figure study, including Apple, intraday point and figure with volume on the Dow, a gold and silver update. So very interesting market these days. And if we have time, we're going to look at the bullish percent as a breadth indicator. If we don't get to that this week, we'll do it next week. So we have a great show planned for you today. Welcome to Power Charting. I'm your host, Bruce Fraser. So to start, let's look at the chart that you have seen repeatedly in the past, the Dow Jones Industrial Average, and let's zoom in. We can see here a overbought condition occurred in the middle of January, which produced a reaction, the biggest reaction that we had seen in a number of months, and then an attempt on a momentum rally back up to the prior peak, another throw over condition, and now we are right back to the overbought line on this large trend channel, and on the steep trend line, you can see that we are resting right on it. So very interesting place. I want to point out one other thing, and that is keep this number in mind. We're going to come back to it. 29,509.34, which was the point and figure count that we had derived in the month of August in this beautiful accumulation range that produced this count up to where we are. Well, look what happened. On the second thrust up, the test of this area here, look where we are. 29,568.52 was the intraday high, is the first time that we have come over the 29,509.34 target. So we got into the target zone of this August count, and we are above the top of this accumulation count back at the end of 2018. These 2 point figure counts have been so useful to us. And then look at this beautiful uptrending channel that we've been operating in really since really started in June. So with that, got to keep going. I want to look at put call option ratios. I have been using these for 25, maybe 30 years, and I find them to be extremely valuable, extremely useful, and I want to share with you how I use them. And so you can see here the extreme high level of put buying that occurs. Now, the green line, just to explain, is the 10-day moving average of the daily data, the raw data. And so we can see that there are periods when the put volume on a 10-day basis becomes quite high. And this coincides with, I guess I'm not going to get my little thing here to highlight. Anyway, so here you can see a accumulation area. This was the original count at the end of 2018, gave us a beautiful count upward. We'll look at the very high put volume readings. This very high level showed tremendous pessimism and set up an important base. In May, we can see another important low was formed with a peak in put option volume. In August, where we had that really nice accumulation structure that we were just talking about, look at the high put readings, which showed a very high level of trader pessimism in the market, followed by the early October low, which was a higher low in the S&P, and this higher low produced a very high level of put volume. This was the beginning of a very important uptrend, which we were able to measure with point and figure charting. And we can see that this took the volume of call buying to an extremely high level. My understanding is that it's historically a very high level of call buying, which shows extreme optimism. We had talked in late December about how the CNN sentiment survey or indicator had reached a reading of 94. Part of that reading is the put call ratio. Now, these are equity put calls, just so you know. But here are the very low readings showing lots of call volume. So call volume comes in at important trading peaks. Here and here, here and here. We can see that there's really important reactions that occur once we get a lot of call buying on a 10-day basis. Well, look where we are now at the end of this uptrend where the put call reading is quite high, showing a lot of call volume. The point and figure is also being fulfilled, and as we've said in prior episodes, the fuel in the tank has been used up right at the point when speculators are most confident to be doing call buying and speculating. So we can see here in late January, mid-January, mid-February, a tremendous amount of call volume. Now, what this suggests is that the market is in a position, as we just saw from the overbought condition on the vertical bar chart, that the market is in a position where it's vulnerable to a reaction. Now, let me take you to a chart. This is actually the chart brought up to date here midday on Thursday during the trading day. So you could see that weakness in the market showed up. So of course I do all my charts, I get them all ready to go so I can make this recording for you on Thursday. And the market was relatively unchanged, down 20 points or so on the Dow. And then I look again when I'm getting ready to record, the Dow's down 300. So I felt as though I needed to bring you up to date on where the chart is at this time. Currently, the Dow is down 189, but look what this has done. It's taken the index back down below the overbought line and also has taken it below the steep trend line. So this puts the Dow Industrials in a vulnerable position for a decline. And I'm going to talk more about that in a minute, keeping in mind this 29,509 level. I want you to remember that, write it down, because we're going to come back to it. Okay, so let's keep going. So here's the NDX. The NDX, this is as of this morning, NDX was down 23 points or so, not too bad, above its overbought line in an overbought condition, which as long as it can stay above this overbought condition, we have a momentum market. Our concern is getting below this 20-day moving average, getting below the trend channel, and then that produces a vulnerable condition for the NDX. Well, things happen, and so let's bring this up to date. And you can see here, look where we are. We are touching the 20-day trading average, and you can see every attempt since the October low, we've had just very brief bouts where we've been able to go below the 20-day average, and we've stayed above the trend channel. Beautiful trend channel, 2 points here, overbought line drawn parallel above, and here we are back below into the channel, which we were not below this morning. And the NASDAQ 100 is down 110 as of the time that we're looking at this. So a big change of character that came suddenly on Thursday during the market day. So as we go back, we can see that we have come back into the channel. This is very interesting. And so overbought condition being worked off. Put call ratios show a lot of call buying, and the speculators are extremely bullish and acting bullishly by buying lots of calls. So let's look at the NDX point and figure. So here we can see that we have a count. This count is my working count, the green one. I extended it out to this yellow area, and I want to show you that also. But I'm working on the green count. This looks to me like the primary count that we want to work with. And so here we can see that we have, in fact, fulfilled the count objective, which went 93.50, 94.50, and we were at 97.12 when I did this point and figure analysis. And we have the larger count goes to 9,800. So we're actually only 2 boxes away from touching the 9,800 count, which we're close enough now that we could almost consider that to be a hit. So the NDX has fulfilled its objective in this area right here. So something for us to keep in mind. Here is Apple. Apple is our wonderful bellwether stock. This is just been a wonderful performing stock. This trend channel goes back to the beginning of June after a pretty good reaction here. 2 touch points set the stride of this channel all the way into February of this year. So from June on, Apple's saying this is the stride that I'm going to go up at. Here's the overbought condition here that sets up our parallel channel and overbought line. And look at how since early January, Apple has been hovering along the overbought line and has just sagged back into the channel here in the last few days. We can see something really important. Look at the volume. There is supply present as Apple has come back into the channel. Attempt to rally, retest this prior high from late January, and now it's come back in to the area of the channel and could easily go back down to the bottom of the channel, which at this time is about 285. Not too far. Again, I consider this to be a relatively benign environment for the stock market because interest rates are low and steady. But nonetheless, that doesn't mean you can't have some pretty challenging reactions even in an ongoing uptrend. So now let's turn our attention to the Dow, and you can see here that this is going back to January. This is 5-minute data, intraday chart, 3-box reversal, and an 18.27 scaling. And so we can see that there's an accumulation structure here. Now, again, this is all intraday trading. So I like to look at the intraday environment and see if I can identify important patterns of accumulation and distribution in those that I can trade from. And I use these with the point and figure, but also the put call ratios that we just looked at. Now, here I'd like to point out that there is a climax of sorts that has taken place right here, and an automatic reaction. This might be preliminary supply. This might be preliminary supply. But here we would want to draw resistance across here and support here. Well, notice that the Dow has fallen back below this resistance area where this buying, excuse my poor penmanship, buying climax we'll call it that for now, formed, and we're back below it here. So this is very interesting. So now this is as of February 14th. Well, let's bring this up to date. And we really haven't brought it up to date because of what's happened today, but I'm going to show you that chart in just a minute. Now, we've taken this count that we showed you. Look at this, 29,339 to 29,541. Well, 29,509, what was the number? You were supposed to write it down. 29,500, let's call it, was the larger count from back in August that we took the accumulation count where the put call readings were showing a lot of put buying as a beautiful accumulation was finishing. Speculators were pessimistic and a beautiful uptrend was begun. So now that count, this count confirms this 29,500 count, which is again an intraday count, but all roads are leading to this 29,500 level. And look at, we missed it by one box. Wow, that's impressive. Now, the other thing that I want to do is I want to just do a little lesson. I really encourage you to take our point and figure course that we're doing, Ramon and I. We, as a matter of fact, the second episode is today, Thursday, but you will not hear this till Friday. And so I want to talk about volume. Now, you want to see very high volume on the turn off of a pivot, which is what we have right here. So turn off of a pivot, very high volume, lifts the Dow Industrials into an uptrend. And when you see high volume like this, you expect to see continuation of higher prices. This is confirmation of the uptrend being ignited. Here you can see very high volume as it pushes up. This column of X's is actually smaller than this column, which shows that there is some supply that is starting to show up as prices are pushing up into what appears to be a buying climax. Then we have another attempt to push up here. Again, not a big column of X's, but it has follow through and momentum that goes to new highs. Well, look at this column here. Look at the volume, pretty high volume right here. Only 6 columns of X's entered here. This is effort in volume without meaningful result in price. So there is supply that is showing up as prices go higher. Here is more volume than even the prior one. And again, this pushes up into a lower high. The point being, we can use point and figure charts to actually do our trading from. So this is something that I like to do, is identify the trading junctures on the point and figure charts. And then also we have a fulfilled objective up here as we see volume not producing meaningful price increases. And then look at this one. Ooh, really big volume here, and a very small push to a lower high. So this is a very interesting chart. It's starting to look very distributional. And again, here's our resistance. We're below resistance, and here's our support. And so we have the potential to go down towards the support area. Well, we want to look at this chart updated. So let's have a look. Well, this is what's happened. We just evaluated this area right here. And now a big decline, sign of weakness, takes out this low and this low. So a very important break of the advance, a break of the momentum, and this is now looking like a last point of supply and a second last point of supply, which we would expect to be a rally of poor quality. This all could be a point and figure count. This count from here over to here produces 2,000 points of Dow count, which we would expect is a Dow count lower, and it actually goes below the low of this chart area, below this low that was made at the beginning of February. So this is starting to look very interesting as of today. This is current, current in the recording. Okay, so very interesting time. Let's turn our attention. We have just enough time to go through gold. You've seen this chart multiple times, and this is our working chart. These are monthly bars. This is a huge accumulation structure. Back, we've done a number of gold blog posts with charts, and you can go back and get this chart. Go back and look at the August of 18 blog, because right on the support line, I wrote this and said, this is the place that we ought to find a good low. And well, you can read it for yourself, and then you can see what has happened since. Gold is a campaign for us because of the sheer magnitude of the structure. Well, this chart is as of the 19th, yesterday, and you can see that after a backing up action, a pause, gold is now making a new recovery high, and it's working its way up towards this 2011 peak and this 2012 peak. Very interesting position for gold. Okay, well, let's go back. Let's look at this area right here in 2019, this backing up action, because this looks like a point and figure count that we could work with. This looks like a point and figure count we could work with also. So let's do that. Here is the backing up action that we just studied. And here are two counts that we're going to take intraday. We're turning our attention to GLD because we can look at the intraday with GLD. Can't look at the intraday on the gold futures, so we'll use GLD, which works just fine. And so here is this backing up action. Here is the rally that has taken us to a new recovery high. Let's look at the point and figure. So now let me go back. Here, there's two counts here. There's one here and there's one here. And we go in, we are looking at 15-minute data on GLD. Let's go up here. You can see 15-minute data, 3-box reversal, and the ATR box scaling is 0.17. Now keep in mind that this is 1/10 the size of gold itself. So, you know, roughly speaking. And so here we can see, look at this beautiful catapult wall. Oh my gosh, out we come. Two counts. So there's a beautiful count here. This count goes 150.79, 150.130. This count goes 150.45, 151.81. They confirm each other. And so this is really interesting. And here we are. We are now in the area of these two counts right in here. So what should happen next? Well, likely get a pause. We don't have to get a pause, but this looks like a place where we have two good counts that have now been fulfilled. Really good trading counts from the intraday point and figure data. But now look, we have this really big count here. And so let's take this whole count area across and see where that goes. And so here, the yellow shaded area represents the combination of those two trading count areas, which gives us a swing trading potential. So we get potentially a pause right in here where these counts have been fulfilled. Maybe, maybe not. We don't have to. And then a continue up. And this goes 164.05, 166.09. Wow. So still higher potential ahead for GLD and for gold. So let's look at this on a vertical chart. This is weekly data. And so now let's do become even more aggressive in our counting, let's go back to this 2016 low from 2018 to 2016. And let's count this area. We can see a beautiful backup here. Volume diminishes in the backup, showing absorption has been taking place. Here's the count that we just did, and these two intraday counts are right here. So this count we just did gave us a nice objective, but now let's take this bigger count and see where that takes us. Okay, and here it is. There's a 2016 low. We count across 19 columns, standard scaling. And we're doing 1 point scaling, not standard. Standard would be 2 points over 100. So we're just doing 1 point scaling. Takes us 164 to 169. Well, that confirms the count that we just did on the intraday. And just for your review, right here, 164 to 166 on an intraday basis on this little area, really right in here. And now we have another count, and this is this backup that we have. And let's go look at this. That's right here, this area. We count that, and that takes 170, 174. Again, another confirming count. So we have two confirming counts that point to this 170 level on GLD. And so this is very, again, shows potential is still there for higher prices, meaningfully higher prices from where we are right now for gold. And so we'll keep a really close eye on this as we go forward. And this is only taking a segment of the entire count area. There's a huge count in gold in that monthly chart, which we've actually done in blogs before, but we'll circle back to that in the future. Now, let's not quit here. We have a couple minutes left. Let's look at silver. So here is, and we're actually going to look at the silver miners today and not look at silver. We did a silver blog a while back, which made the case for silver being an important investment and trading idea. And what I want to do is I want to, first of all, point out that we have a beautiful stepping stone reaccumulation structure here. Big uptrend and a pause. The pause is the reaccumulation. Often reaccumulations have their lowest low come very early in the structure. It's exactly what happened here. Higher lows then from that point onward, which is very bullish because higher lows show that bids under the market are aggressive and they're not allowing prices to come back down to the support area or to new lows. And you can see here after this major sign of strength, there's an attempt to come back in, but look at the lack of volatility in this reaction. Absorption is occurring. So we have absorption here. And so I'm running out of time. And so I want to just point to the point and figure. After the backup from the air into the area of absorption, we're at around 132 right now, or 32 right now, and we have a count that goes 40.5 to 43. So with that, silver continues to have tremendous potential. It is just pivoting out of this absorption reaccumulation area, which shows it's ready to start marking up again. We have a nice trading count that goes up to 40.5, 43. And with that, so glad that you're here, and we'll see you next time. Thank you so much.